In my downtime, I like trying new concepts and old concepts, and a lot of the information or a lot of the strategies I enjoy finding on Forex Factory in the forums. And I came across this one from 2016 by this person here, uh, me HDI, me HDI 343, and it's a really simple system, and it's 288 pages. And I'm a huge fan of the TDI, Traders Dynamic Index. And if you don't know what the Traders Dynamic Index is, this one here is put together by, I just forget, sorry, is it just Uncle L? Yeah, just Uncle L, okay. I've only slightly modified it. I've just changed the colours a bit, but that's it. If you just get online and learn more about the TDI. Down below is the stochastic. I'm not a huge fan of the stochastic, by the way. I've always struggled to use the stochastic. And on the chart is there's three EMAs. I have a 5, an 8 and a 13, which I'm using to help visualize which way the market's going. Okay, simple as that. If you want to, you can use a higher time frame as well, like a 1 hour. Okay, but just for now, I'm just going to go back to the 10-minute, because the 10-minute suits my style of trading, and also my bank. Okay, so the strategies are here. There's two strategies. It's so simple. Okay, he suggests this is called lower risk stress free TDI system, and he is suggesting that he uses it on a 4 hour or a daily. I think method 1 is for the daily, and method 2 is for the 4 hour. Okay, from 2016. But I used it last night on a 10-minute chart and had a really great profitable session. So the strategy is this: when the stochastic is in this top range above the channel here, that's called overbought. You look for buys. When the stochastic is below the channel, or on this line down here, you're looking for sells. It's as simple as that. That's for strategy 1 on the daily. Okay, and what you want to see, the TDI is a little bit complicated. Initially what you want to see is green going above red. Okay, for longs. There's also an orange line here, which is like a 34 moving average of a Bollinger Band. You can see the Bollinger Band here. And there's also a black line, and that's the 0 line. Sorry, that's the 50 line. The 50 of this indicator. I'm not explaining it. I always call it the 0 line. If it's above that, it goes long. If it's below that, it's short. I call it 0, but they call it 50. So to me, when I have green above red, and it's above orange, and it's above this black line, it's we're looking for longs. And it's the same for shorts. Green below red, below orange, below the black line, we're looking for shorts. Okay, it's as simple as that. And so your entries for longs would have been here on this 10-minute chart. So this has reached the overbought area, which is 80. And the oversold area is 20. So this punched up through here. We can see the moving averages are all in line. The 5's above the 8, the 8's above the 13, and as far as I'm concerned, that's 100% trade. So you take that. Where you get out is up to you. Obviously, it depends on your risk factor. Right here, this is the NQ, so there's 70 points. I'd certainly get out here when it started to come back into these EMAs. And of course, so you need to determine that. You need to determine your risk factor. Where do you put your stops? Well, I'd put it somewhere under here, not too far away. So that's how you take longs. And how do you take shorts? It's just the same thing. As soon as the stock hits, this 20 and the TDI is in its correct position. You're looking for shorts, and that would have been around about here, and yet again you would have got out about there, and that is it. There's no long here because the stochastic didn't get up there, and the market just stayed short. It's a really easy system, hey, but like all strategies, I believe they work 50% of the time, some more, some less, but so long as your risk to reward is greater than your losers, you're going to be in front. You can, as I mentioned before, use another chart like a 1 hour to help with, trend. So you can see here in the USA session, the grey, that it was always pushing down. Okay. Then at the very end of the night here on the 10-minute, it went back up, but the 1 hour didn't give you the signal. So that's up to you, how you determine you want to do it. So this is a 1 hour chart, and there would have been some signals in here, but I actually find they're not as, I don't know, for some reason the shorter time frames seem to work a little bit better with the strategy than the longer time frames. Strategy 2 is a little bit different in that I'm going to put it on a 4 hour because that's what he recommends. And by the way, his strategy is for Forex, and I'm using it on oil and the Nasdaq. So what he's saying for like a 4 hour chart is if the stochastic is if it's near the 50 on the stochastic and it's pointing down, and of course the TDI is in its correct position, well then you can take trades, okay? It doesn't have to be oversold, and I'll just reconfirm that. Stochastic near or above 50 for longs, stochastic near or below the 50 for shorts. So he's given you a little bit of leeway there. You could apply the same approach to shorter term time frames. So if I just go into, a lot of people like a 5-minute chart, and you're going to find lots of scalps here on the 5-minute. Okay, so like oversold in here, so bang, look at that. Oversold here, overbought here on the 5-minute chart. You can see everything's in its position. Oversold here, okay. Here, little scalps. Of course, smaller time frames, more risk is on the table. So if you're happy just to scalp little bits in the NQ, this is a really good way to scalp. Okay. There's really not much more I can say about this strategy other than it's really simple and really easy on the eye, and you just don't have to think too much. But just always keep an eye on the larger time frames. You really want to have at least a 1 hour, I believe, sort of up somewhere and just sort of having a look. Try and put it out and just see exactly what it's doing. But I do enjoy scalping the smaller time frames. I'm happy just to make small trades and get in and get out. Like 2 trades is quite comfortable for me. So I'll leave the link down below to this particular strategy. Low risk, stress-free TDI system. Yeah, it's very good. It's actually really good, and considering it's 2016, it still holds up. So it just goes to show that the market doesn't really change a lot. I'm just going to reiterate that the TDI is a little bit of a confusing indicator, but don't get too freaked out about it. It's RSI with a moving average, and then it's got this other moving averages and a Bollinger Band. Oh, I just wanted to say something else. There's also another trade which he hasn't mentioned, and they're risky. But if you do like taking a risk, and I don't recommend it, you can trade this. See how we're in overbought here. Okay, so we're going long, but see how the green has poked up through the Bollinger Band, right? He calls Dean Malone, who was the inventor, I think, of the TDI, says these are called shark fins. And when you see that, right, not always, but a lot, will produce a reversal. And as you can see here, the market went down. So where do you enter? I would enter as soon as this the green line comes back into the Bollinger Band and definitely crosses through the moving average. So you could have taken a scalp here. It's the same here. See how this green line has come out? It's a shark fin. It's crossed back up through there, and there was a small scalp. See here how it's poked through. It's not great. You really want to see something that's been hanging out for quite a while. And what is quite a while? I don't know. You'd have to go back through your assets and just sort of work that out. You could have taken this back and you probably would have broke even. I don't know. And of course this is at the very end of today where the market's closed for the week, and so there's that portion of the trade. See here, it's come out, it's ducked back up, and there's your trade. What I would be doing with this would be really just looking at the stochastic and just making sure that it's a really solid, just straight line going up. Okay, if it gets a bit wiggly, don't take the trade. Yeah, just go back through and check these out. They're not always going to work, as you can see here. This one came back up and failed, and then it was the next one that worked, and you can see here that it reversed. I haven't actually done statistics on this, on how profitable this reversal system is. I'd need to spend a few days, I think, just going back through thousands of setups and just seeing, where's my risk tolerance with these reversals, because reversals are always scary at any time. But I'm just quickly going through them now just to show you the ones that I would pick. So this one here. What I would also do is just look at this stochastic. Is it coming back through into the channel for these shark fin reversals? See here it didn't. I'd go no trade. Okay. But these shark fin reversals are more of a really hardcore scalping. So I would just stick to the original concept that this guy came up with, and I think you'll do pretty well. Okay. Go practice this. Catch ya.